This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, July 4th, 2016. Euro dollar. So the euro continues to extend its correction out from recent lows, though ultimately that recent break that we saw back down below 110.98 does put the pressure back on the downside, with a lower top ideally sought out somewhere ahead of 113 in favor of the next downside extension back towards next key medium-term support at 108.23. Ultimately, only a break back above the 113 area would take the immediate pressure off the downside. Sterling dollar. So cable remains confined to a very well-defined downtrend, with the market trading at plus 30-year lows. At this point, there's risk for additional declines to extend below those recent lows that we saw at 31.20, down towards and eventually below next key psychological barriers at 130. Any rally should be very well capped up towards the 138 area, while ultimately it would take a close back above 140 to alleviate immediate downside pressure. Dollar yen. So dollar yen remains confined to a very well-defined downtrend, with the market recently trading off 2016 and multi-month lows at 98.99. At this point, a lower top was sought out somewhere below 106.81 in favor of the next downside extension below 98.99 and potentially down towards next key support in the 93 area. At this point, a break back above 106.81 would be required to take the immediate pressure off the downside. Euro Swiss. So Euro Swiss has mostly been chopping around. We had seen a breakdown in recent trades to 2016 lows at 106.23, but ultimately the market has done very well, being supported down below 107 and closing above 107 and holding above that level in favor of continued consolidation. We could see this market once again trade higher in the coming sessions, with a break back above the 109 area to potentially accelerate gains up towards next key resistance in the 111.30 to 112 area further up. At this point, only a close back below 107 would really compromise the overall constructive outlook for Euro Swiss. Aussie dollar. So Aussie has seen a bit of a correction in recent trade, though ultimately it looks like the market wants to put on the lower top around 76.47 ahead of the next downside extension, which will be confirmed back below 71.45, exposing a retest of the 2016 lows at 68.27. Really only back above 76.47 would compromise this bearish outlook. Dollar CAD. So dollar CAD has been consolidating in recent trade, though ultimately it looks like the market wants to carve out a major bottom here, with a break back above 31.89 to confirm this bottom and accelerate gains up towards the 135 to 140 area. Ultimately, the market would need to hold above 26.55 to keep this structure intact, while back below 126.55 would negate and put the pressure back on the downside. Kiwi dollar. So Kiwi has seen a nice little correction in recent trade, though the market has recently put in a 2016 high at 72.97, and it should have difficulty trying to establish above that level. We need to see a break back below 69.63, however, to really put the pressure back on the downside and expose deeper setbacks towards next key support on a medium-term basis at 66.75. SPX 500. So the S&P 500 has come storming back after recently trading down to as low as the 1990 area. This latest break back above 2100 does suggest that the market could be poised for a retest of the recent 2016 high at 2128, just shy of that record high from 2015 at 2133. At this point, we need to see a break back below the 2065 area to take the immediate pressure off the top side. Gold. So gold remains highly constructive, with the market now trading up to fresh 2016 highs and looking like it wants to test the 1400 area over the coming days and weeks. At this point, look for any setbacks to continue to be very well supported ahead of 1250, ahead of that next major upside extension in this market.